So in this video, we're going to talk about the Cava Group. Many call it the second coming to Chipotle. And before we get into the charts, let's get into this article as it explains why Cava has many similarities to Chipotle. So investors have long been looking for the next Chipotle in the restaurant space, as it has been one of the best performing restaurant stocks over the last 2 decades. One restaurant operator that looks like it may have the potential to be the next Chipotle is Mediterranean food restaurant operator Cava Group. Let's talk about the similarities. First comes down to the food itself. Both use a limited number of high quality ingredients that people can use to customize their meals into wide variety of options. The meals are then made in an assembly line process. Now, because of the limited number of ingredients, it increases supply chain efficiencies, also allowing a restaurant to buy from fewer suppliers, helping eventually give it some pricing power with its suppliers as it scales up. Also, it can also create less prep work, which equates to savings on labor hours. Most importantly, though, it allows for the assembly line process of putting orders together quickly, which speeds throughput. Now let's talk about restaurant level margins. Last quarter, Cava had a 25.6 restaurant level margin compared to Chipotle's 25.5. Now for its fiscal third quarter, Cava's same store sales soared 18.1% with a 12.9% increase in traffic. Impressively, this came on top of the 14.1% increase the year before, representing what is referred to as a 2-year stacked comparable store growth of 32.2%. In layman's terms, Cava is growing same-store sales. Like Chipotle, Cava is seeing success through culinary innovations such as the introduction of its popular grilled steak and the introduction of limited-time offerings such as its garlic pita chips. The company is also leaning into marketing technology. It launched a new loyalty program in October, just like Chipotle did a couple of years ago, and it's looking to embrace AI with its connected kitchen to improve order efficiency and ingredient management. Again, something Chipotle did a couple of years ago. Now, the company ended last quarter with only 352 locations compared to 3,615 for Chipotle. It is currently looking to grow its restaurant base by at least 17% next year and has discussed 15% yearly unit growth in the past. Thus, it has a long runway for growth. Now, going to the charts, we're going to start with the monthly chart. And Cava went public back in June of 2023, reached a high of roughly $57, and then closed at all-time lows near $30 back in September. And then pretty much it was off to the races. We do have a monthly buy level down near $45. When we get to the smaller time frames, we'll see that this $73 level, $72 was resistance once upon a time, became support. And now you can see on the upside, you do have some rejection wicks starting at the $140 level. So let's drill down to the weekly chart. Again, we had all-time highs once upon a time. That became support. Again, new all-time highs. That became support as well. Not once, but twice. Until eventually price broke all-time highs. Now we're getting this pullback. And the question is, where is price going to stop and then reverse? Let's go down to the daily chart to see if we can get some clues. Now, price did recently form a daily sell level at about the $124 level. This drop in price, base and candles, and the drop out. All right, so we do have a gap that needs to get filled, which will coincide with the 200-day moving average. And that gap was on high volume. So this is where I'm looking for price to pause and potentially reverse. Going back out to the weekly chart. That would put price roughly at the 66% retracement, which is also not a bad area to get long. Thanks for watching. Subscribe. Please like the video.